You ever feel like sometimes we get completely swept up in something? A big idea, a new trend, something that just feels like the future, almost undeniably so. It's got all the buzz, all the headlines, all the smart people telling you this is the way things are going to be. And then, a few years down the road, you look back and you think, wait a minute, what just happened? Did we all just miss something? That's kind of the feeling I've been getting lately when I look at the electric vehicle market. For years, it was all about the EV hype. You heard it everywhere. Electric cars were the future. They were cleaner, faster, smarter, cheaper to run. Everyone was going to have one, and if you didn't jump on board, you were going to be left behind. It was almost like a moral imperative for some people, right? You were doing your part for the planet, for innovation, for progress. And hey, if you're finding these kinds of deep dives interesting and you want to keep exploring these fascinating shifts in our world with me, make sure you hit that subscribe button. It really helps us keep these conversations going and bring you more of these stories. But back to the EVs. There's this phrase I keep hearing, or a sentiment really. He trusted the EV hype and lost everything. Now, let's be clear. We're not talking about someone literally losing their house because they bought a Tesla. That's not the story here. But it is about a significant, sometimes painful, financial reality check that's hitting a lot of people in a lot of big companies who bought into that initial, almost euphoric vision of an all-electric future. It's about the gap between the dream and the messy, complicated reality. Think about it from the perspective of someone who bought an electric vehicle, say just a few years ago. Maybe they stretched their budget, maybe they were excited to be an early adopter, to be part of this new wave. They heard about the fuel savings, the lower maintenance, the environmental benefits, and they thought, this is a smart move, this is an investment in the future. But what's happened since then? Well, one of the biggest, most jarring realities for many EV owners has been the absolutely brutal depreciation. We're talking about a level of value loss that's just staggering, especially when you compare it to traditional gasoline-powered cars. Imagine buying a brand new electric car, something sleek and modern, for, let's say, $70,000. You drive it off the lot, you feel great, you're part of the revolution.
Then, just 3 years later, you go to trade it in. Or maybe you just check its resale value and you find out it's worth less than half of what you paid. I mean, we've seen examples where a car that cost nearly 300,000 Brazilian reals in 2021 was worth less than half that in 2024. That's a 58% drop in value in just 3 years. Now, compare that to a similar gasoline car from the same period, which might have lost, say, 26% of its value. That's a massive difference. That's a financial hit that can feel like a punch to the gut. It's not losing everything in the sense of bankruptcy, but it's a significant chunk of your hard-earned money just gone, evaporated. And why is this happening? Well, it's a few things, really. For one, the technology is moving incredibly fast. When you buy an electric car today, you know that in a year or two, there's going to be a new model with a bigger battery, faster charging, more range, and maybe even a lower price. It's like buying a cutting-edge smartphone or a high-end computer. The moment you unbox it, it's already on the path to obsolescence. With gasoline cars, the technology evolves, sure, but it's a much slower, more incremental pace. A 5-year-old gasoline car still feels pretty relevant. A 5-year-old EV? It can feel like ancient history in terms of range and charging speed. Then there's the battery, the heart of the EV. People worry about battery degradation. Will it hold a charge as well in 5 years? What if it needs to be replaced? And let me tell you, replacing an EV battery pack is not like changing a spark plug. It can be incredibly expensive, sometimes costing tens of thousands of dollars. Even if it's less frequent than other maintenance, the potential cost looms large, and that impacts resale value. Buyers are hesitant. They're thinking, am I buying someone else's future headache? And let's not forget the infrastructure, or more accurately, the lack of it in many places. The range anxiety is real. If you live in a big city with plenty of chargers, maybe it's not a huge deal. But what if you want to take a road trip? What if you live in a more rural area? The charging network, while growing, is still far from ubiquitous, especially in vast countries like the United States or Brazil. That uncertainty, that planning required for every long journey, it adds a layer of friction that gasoline cars just don't have. You pull up to almost any corner and there's a gas station. With EVs, it's still a scavenger hunt sometimes.
And that also affects how desirable these cars are on the used market. So for the consumer, that initial hype might have led them to make a financial decision that, in hindsight, didn't pan out as they hoped. They trusted the promise of a seamless, cost-effective transition, and instead, they're facing significant depreciation and ongoing infrastructure challenges. It's a bitter pill to swallow. But it's not just consumers feeling the pinch. The companies that jumped headfirst into the EV revolution are also facing some incredibly harsh realities. We're talking about massive, multi-billion-dollar losses. Take Ford, for example, a titan of the automotive industry, a company that literally put the world on wheels. They went all in on electric vehicles, pouring billions into new factories, new technologies, new models. And what's the result? They projected a $3 billion loss from their EV division in 2023 alone. $3 billion! And some reports suggest they're losing over 37,000 euros. That's like $40,000 on every single electric car they sell. Think about that for a second. Every time a shiny new electric Ford rolls off the assembly line and into a customer's driveway, the company is losing $40,000. That's not sustainable. That's a bleeding wound. And Ford isn't alone. Other legacy automakers are facing similar struggles. They've invested heavily. They've retooled factories. They've trained workers. They've built entire new supply chains, all based on projections of soaring demand and eventual profitability. But the demand hasn't soared quite as fast as they hoped. And the costs of production, they're still incredibly high. Building an electric car, especially the battery pack, is complex and expensive. And while they might save on some engine components, they're adding incredibly sophisticated electronics, cooling systems, and entirely new manufacturing processes. Then you throw in the price war. Suddenly, you have new players, especially from China like BYD, coming in with incredibly competitive, often much cheaper electric vehicles. They're disrupting the market, forcing established players to lower their prices to compete. And when you're already losing money on every car, lowering the price just means you're losing more money. It's a race to the bottom, and it's squeezing profit margins to the point of non-existence for many. It's almost like the dot-com bubble of the late 90s, but for cars. Everyone saw the internet as the future, and it absolutely was.
But a lot of companies, even good ideas, went bust because they scaled too fast, spent too much, and couldn't find a sustainable business model before the money ran out. The EV market feels like it's going through a similar painful correction right now. The vision is still there, the long-term potential is still there, but the path to get there is proving to be far more treacherous and expensive than anyone anticipated. And this isn't even the first time we've seen this play out with electric cars. If you look back in history, it's fascinating. At the turn of the 20th century, electric cars were actually quite popular. They were quiet, clean, and easy to operate, especially for women who didn't want to deal with cranking a gasoline engine. Companies like the Electric Vehicle Company were booming. But then Henry Ford came along with the Model T, mass production and cheap gasoline. Suddenly, the electric car couldn't compete on range or price, and it faded into obscurity for decades. Fast forward to the 1990s and you had the GM EV1, remember that? General Motors produced this futuristic-looking electric car. It was leased to customers in California and Arizona. People loved it. It was innovative, it was quiet, it was ahead of its time. But GM ultimately decided it wasn't profitable, citing high production costs and limited range. And in a move that still baffles and angers many, they recalled almost all the EV1s and crushed them. Literally. They took these perfectly good, working electric cars and turned them into scrap metal. It was a stark reminder of how difficult it is to bring a truly revolutionary product to market when the economics aren't quite there yet. So when we talk about trusting the EV hype and losing everything, it's a multi-layered story. It's about the individual consumer who feels financially burned by rapid depreciation and unforeseen challenges. It's about the massive corporations pouring billions into a future that's proving far more expensive and slower to materialize than predicted. It's about the market correcting itself painfully after a period of intense, almost irrational exuberance. It doesn't mean electric vehicles are a bad idea. Far from it.
The technology is improving, the batteries are getting better, the charging infrastructure is expanding, albeit slowly. But it's a reminder that innovation, especially disruptive innovation, rarely follows a straight line. There are bumps, there are detours, there are periods of intense optimism followed by periods of harsh reality.
The hype creates a certain expectation, a belief that the transition will be seamless, fast, and universally beneficial. But the reality of transforming an entire global industry, from manufacturing to infrastructure to consumer habits, is incredibly complex and costly. It's a marathon, not a sprint. And for those who jumped in too early, or invested too heavily, or simply believed the most optimistic projections without question, this current phase of the EV journey feels less like a smooth ride into the future and more like a bumpy, expensive lesson in market dynamics. It's a story about the perils of collective enthusiasm, about the difference between a promising idea and a profitable, scalable reality. And it's a story that's still unfolding. The electric vehicle will likely be a dominant force in transportation eventually. But the path to get there is proving to be littered with financial losses, shattered expectations, and a lot of very expensive lessons for everyone involved. It's a fascinating, if sometimes painful, chapter in the ongoing saga of technological progress and market evolution. And it reminds us that even the most exciting future often comes with a hefty price tag, and sometimes that price is paid by those who believed in the hype a little too much, a little too soon.